Hello and welcome to Market in a Minute, May the 9th, 2025. This was a week when the fog of war drenched the market in the kind of volatility and uncertainty not seen in a very, very long time. It's the kind of environment when one day fears of escalation causes the market to plunge thousands of points, and the very next day, optimism about a quick resolution triggers a many thousand-point rally. But how do we make sense about what's really happening? How do we read between the lines, so to speak? Let's start by digging into the daily chart. So the market started the week with the index just below the 50-day exponential moving average, shown here in orange. After the first two days, it dropped below the 100-day exponential moving average, shown here in green. Then later it found support at the 200-day exponential moving average, shown in blue. We analyzed the market behavior from this shooting star on April the 4th to this big candle down yesterday. So let's see what happened since then. Number one, a bounce like this after a major sell-off like yesterday's is nothing extraordinary. Number two, the index is now caught between the 100 and 200-day exponential moving averages. Number three, the market broke below the December 20 support, which was here yesterday, and broke back above the resistance today. Number four, volatility as measured by ATR has jumped back above 3,000 points. It is now currently at 3107 points. Now, just for perspective, let's see. While the market did touch these levels around here in December 2024, it has not been anywhere near these levels in a long time in the past. So we are truly in uncharted territory as far as this level of volatility is concerned. This means at 3107 now means it is not improbable for the market to move more than 3,000 points in either direction when it opens next week. Now, it's very important to notice that while with our momentum analysis from yesterday, that is the RSI, tilting towards a bear market, the only thing technically keeping the index from a proper bear market now is the 200-day exponential moving average, which is considered as a technical theoretical barrier between bullish and bearish markets. Now let's make a very interesting comparison. Notice here, comparison with OGDC, the largest company by market cap on the KSE 100 index. Now you'll notice very similar price patterns and momentum patterns in OGDC and the KSE 100 index over here. The difference is that OGDC broke below both the 200-day exponential moving average and the 200-day simple moving average yesterday, which means that by all accounts, it is now officially in bear market territory. Now, stock market logic, incidentally also the title of a must-read book on market dynamics, dictates that either the index will pull the bellwether stock up or the weight of the stocks will pull the index down below the 200-day exponential moving average. This is the point on the KSE 100 index, and this is the point on the OGDC chart. This is what we'll be monitoring very closely, so stay tuned to judge the direction of the market from here on as the next week rolls on. Thank you.